Hi everyone, gather round, coming up at the back there. Please don't be shy. The more people up here, the better. I understand you're all hungry. I also only have 10 minutes, so I'm going to try and get this done as quickly as possible, but hopefully by the end of these 10 minutes, you're all a lot smarter and a lot more informed in the market, or at least to the level I am, or like to think I am. So my name's Pelecanos. I'm the CEO at Trireme. Today I'm going to be talking to you about the dual dynamics between project bloat, lots of projects coming to market, and restricted capital access. I also need this clicker. So let me start with a question. Here we go. Yeah, let me start with a question. Who here has actually launched a token? So we've got like 1, 2, 3, 4. Who here has launched 2 tokens? Okay. So you basically could go home and launch one right now. It's become extremely simple. There's so much resource out there to help people launch tokens. There's a lot of advisors to help people launch tokens. There's a lot of platforms to help people launch tokens. You can literally go to ChatGPT right now and say, how do I launch a crypto token on chain? And it'll give you a step-by-step guide on how to do that, right? Which is great if you want to launch a token. The issue is that a lot of founders now think that they're tech geniuses and are bringing a lot of projects to market. So to give you a glimpse of what this looks like, when I first got involved in crypto in 2016, there were around 600 projects on CoinMarketCap. At the peak of last cycle, there were around 11,000 projects on CoinMarketCap. Can anyone have a guess as to how many projects are on CoinMarketCap currently? Just a stab, right? Double, actually. It's close to 2.6 million, right? Which is a crazy amount of growth. Now, I caveat that by saying that the way that CoinMarketCap sort of sifts through the market has changed a little bit, and they're looking a lot more on-chain. So that's contributed to the growth. But still, it gives you the idea of what I was talking about at the beginning, right? We are getting an extreme amount of projects coming to the market. And basically, at the backdrop of all of that is we're seeing a crowded marketplace, so a lot less success. So of the top IDOs that have happened since the beginning of the bullish part of the cycle, which we say is around January 23, 77% are trading below IDO price. So that means if you're a retail investor or a VC, you're probably underwater on your investment. And if you're underwater on your investment, you're less likely to invest into the next thing because you don't have the capital available, right? So the net impact of that is we get reduced volumes in the market. And also, that's all happening to the backdrop of major cap assets performing multiples, right? So as an investor, what do you want to buy? So while that's going on, we're having this like huge amount of growth in projects. We're also seeing on-ramps get extremely squeezed. So again, to throw you an analogy from previous cycles, in 2017, you could basically log on to like Binance or Crypto.com anywhere in the world, Coinbase, anywhere in the world, register with your credit card, do a very basic KYC, and then buy crypto and enter the ecosystem. In 2021, it was a little bit harder, mostly in sort of China. You couldn't get access. Now in 24, most on-ramps are shut off, right? So what's the net impact of that, right? It means that as the market goes through its sort of bullish phase and we do get those crypto tourists, which we were all crypto tourists at one stage, we're going to have effectively less capital entering into the space. And this is all while we're having an enormous amount of projects coming, right? So you can see where I'm going with this. We can see that the amount of on-ramps getting shut off and the impact that's having on sort of new users entering the space in volume, right? So this chart here is volume over the sort of since 2014. So that's a decade worth of total market cap volume. If we take sort of a view of where we are in the cycle to where we were 4 years ago, roughly, September to September 4 years ago, we're actually down on volume, which is a scary thought considering if you do the same thing from September 2020 to September 16, we had a 116x increase in volume. So this shows like a really core issue with our industry is if bid can't get into the market, if dollars can't get into the market, then how are projects meant to perform well, right? And we can also see the shift away from sexes in the aggregate value of stablecoins on exchanges. So that's that red line there. basically, as on-ramps get shut off, as exchanges stop servicing people, mainly in Western economies, which do have the largest purchasing power per user, and as a project owner, you want people with large purchasing power to come in and purchase your token, we're seeing a lot of these people move off-chain. So in 2022, there was about 147 billion in stables, and there's a significant drop in that currently. And again, we can see this on chain. We can see the users moving from the sexes. We've had an enormous increase in wallets on chain, and the sad thing is, even though we've had this enormous increase in wallets, the aggregate value of stablecoins is more or less the same as it was last cycle. So that means that we still have the same pool of capital, the stagnant pool of capital that's getting recycled around the market, and it's very PvP right now. It's PvP for traders, it's PvP for projects. Everyone's trying to attract the little bid that's in the market to their project. And if we sort of average this out across the amount of bid per user per wallet, across the amount of projects coming to market, we can see that we're getting on average now 50K of yearly bid per project, right? 50K per year of bid, right? In 2020, it was around $1 million of bid per project. So if you're looking to launch a project now, or you're an investor trying to buy something, you need to understand that liquidity is effectively your biggest concern. Because if no one wants to buy the asset, it's effectively worthless. Like, let's just take a moment to pause and think about what a crypto token is. It's a utility, right? A utility only has value if people want to use it for its utility. So if there is no utility or no demand, it has no value, right? So liquidity is going to become extremely important as the market cycle continues and into future market cycles. But this is all quite grisly. But the positive part is we are actually about halfway through the bullish part of the market cycle. And the second half of the bullish part of the market cycle is generally characterized by strong altcoin performance, right? We might not see that this cycle because of the aspects I've been discussing here, where we have had in the past effectively a small investable universe of assets and a large investable pool of capital coming into those projects. Again, to go back to that 2017 cycle, if you were trading it, all you had to do was buy the next coin in coin market cap that hadn't pumped, because the capital was just looking for what to buy. There was 600 assets to buy, right? So it was pretty easy to trade. You didn't get lost in the universe. In 21, again, like I said, 11,000 projects on CoinMarketCap, but we had stimulus money, we had extremely low interest rates, and everyone was locked in their house because of COVID. So you had an enormous capital injection into the space, into those 11,000 projects. And this is sort of how we perceive the current dynamics, right? We've got an extremely large investable universe and a small investable pool of capital that is going to struggle to grow like it has in previous cycles as we go into the bullish part of the market cycle for alts. Also, because capital now is so fleeting and it is extremely PvP, people aren't really investing in value, they're investing in narrative. So again, to look at previous cycles, there was generally around 2 to 3 narratives the whole cycle that people will buy, right? Like I said, we've only been in the bullish part of the market cycle since about January 23. We've already gone through about 7 narratives, right? So it gives you an idea of what capital's looking for. It just wants to keep hunting narrative, flipping it, hunting narrative, because liquidity is spread so thin now across projects. So how do projects capture volume so that they can sustain? And volume's important because volume's analogous to depth and liquidity. I think the most important thing here is to not list a token as a form of fundraising. The key issue that so many projects are making right now is they list because they need to, raise money off a launch pad, or they need to sell their token on a listing to get capital, right? That's effectively, could almost be considered a scam if you think about it. You need to focus on product first and then the token listing, right? Because as long as you have product, you have utility. And again, if you have utility, you have a reason for bid. Community is extremely important. It's always been important. It's more important now than ever. And then again, like well thought out tokenomics and nice VCs. But these tie in with that first point is when you have a token, you want that token to perform. The price of that token is only a consequence of supply and demand. If you mismanage your supply and you don't have the requisite demand in order to meet the inflation, then your asset is going to go down simply as a consequence of supply and demand. And so then, again, what should investors be looking for, rather than projects? Look, like as I mentioned, liquidity is going to be extremely, extremely important as we go through the market cycle, because if something remains liquid, it can maintain momentum. If it can maintain momentum, then it should get that reflexive impact that we've seen when projects just continue to run to the moon, right? That's a consequence of liquidity and momentum. Rabid communities, like it is extremely important to have a passionate community behind it. When we've seen it with Bitcoin, we've seen it with like basically any major asset. We see it with Sol right now. And then, as I've discussed, is well-managed free float. If you're not, again, I just want to make the point extremely clear. If a project is not managing their free float of assets well, relative to what their expected demand is, the asset is going to trend towards zero. And that's what we've seen with 99% of altcoins over the different market cycles. And I promise to be quick, so on that note, I'll stop. Any questions? Cool. Oh, yeah? Yeah, absolutely. Just find me after the talk, and I'll give you my Telegram. Cool.
I would say hi. Yeah, we have another question briefly.
Do you think there's a positive outlook for liquidity coming in the future? Yeah. So what's interesting about we've always been waiting for the ETF. We got the ETF, right? The ETF is institutional flows, and it's actually not leaving those products. So what we're waiting on, well, what the altcoins community are, and what I guess retail investors are waiting on, is the wealth effect of a really strong L1 push, because everyone who's on that L1 gets rich and then they buy into alts. So that can kickstart the value in the industry, right? Which I've shown you is effectively been stagnant from the last cycle. Second to that is, as the space becomes more, I don't want to say institutionalized, but more regulated, and governments can feel comfortable about people putting capital back into the industry, we should go into a much more sustained cycle. I think after last cycle, everyone who had been through the previous cycles was like, they just keep getting bigger and better. Which, I mean, fingers crossed. I think it's a lower probability for alts than the last cycle, unless we get huge stimulus, right? And then on-ramps are put back online. But currently where we are, people are poorer, people are more indebted, and on-ramps are squeezed. So again, go back to supply and demand whenever you think about an altcoin. They are inherently worthless. I'm sorry if I offended anyone, but it's my belief. But if they have no value, if they have no actual value, like a share might have a value, you buy a stock in Boeing, at least you're buying raw materials at the end of the day. With an alt, it's all supply and demand. So that's why understanding what is the net demand coming into our industry relative to what's the net supply that is going to inflate in the industry gives you a good trajectory of what price should look like per asset over time.
Thank you so much. Another round of applause. I think it's very well deserved.